I'm going to walk through on the whiteboard exactly how this calculator works and then show you a tutorial from the website so you can see the calculator in action and know exactly what to expect. Real freedom is financial freedom. It's up to you to take control of that. So let's get started. This is one of my favorite calculators. It's a simple mortgage calculator. Note, it doesn't take into account things like PMI or taxes or anything like that, but what it does is it takes into account principal and interest on the loan. It's very straightforward. The whole point is to show you that if you add some principal to your payment every month, in other words, you make a slightly larger payment than you're required to, that extra money goes direct to principal. Pays down the loan faster because the interest is calculated on the principal, so you'll save money on interest. And you can put it in, you'll see, and you can change it on the fly and just hit enter. I'll explain in a moment and see how it calculates and what you can save. All you have to put in is your total loan amount. I think the average in America is around $400,000 for a home. How many years? I just used 30. Interest rate, 7%. Okay, that's all you put in. Now, using this information, just principal and interest, you would have a monthly payment of $26.61. You would pay in total, by the time you're done in 30 years, you would have paid $958,000, almost $1 million for a $400,000 home. In interest, $558,000, right? Because it was $400,000 for the home, plus $558 in interest gives you a total of $958. When you use these calculators, what's happening is you're trying to get your interest down. You have to pay this no matter what. So the only thing you can attack is the interest. For sake of argument, you'll see there's an input button. How much extra do you want to put per month? Let's just say we add $200. What does that mean? Instead of $26.61, you're now going to have a payment of $28.61. So if you can come up with an extra $200 a month, what would that do for you? Here's what it would do. The paid total would be $831,000 by the time you're done, not $958. The total interest would be $431,000. So $400 for the home plus $431 in interest is $831. As you can see, there is a substantial savings. You save two things. You save time, you save money. You save 69 months, which is approximately 5.5 years. So in other words, let's just say instead of paying 30 years, you're going to pay 24.5 years. You're going to end up being done a little over 5 years faster. So your payments will end in 24.5 years. Then you saved $126,000 in interest. That's substantial, right? Instead of a total of $958 by the time you're done, it would only be a paid total of $831. Now, yes, your monthly payment is going up. So if your monthly payment goes up, you might be thinking, well, how in the world did I end up paying less money if I'm paying more? It's because this payment you had to make for 30 years. This payment you only had to make for around 24.5 years. That's why even though it's a slightly larger payment, you're able to save money because you make it for less time. You save time, you save money. The point of this calculator is that you throw in your numbers and you just put in how much extra can you add per month, hit the button, see the savings. It's meant to be encouraging, meaning put $50 in, then put $100, hit the button, put $200, hit the button, put $400, hit the button, put $800, hit the button, and see what a difference it can make in how much you're going to pay in total and how much interest you're going to pay. Because that may be a huge motivator for you to do things like reduce your budget in other areas to try to pay it off faster. Watch this tutorial. It'll show you exactly how it works on the website, and a link will be in the description below so you can get right to the calculator.
Here we are at the mortgage calculator. It tells you the savings calculation at the top. As you scroll down, it'll have the information, explains everything in the calculator. We'll also have a video up here at the top when this is done. All the calculators have videos. You can reach them all just by hitting financial calculators. What we discussed about was on the left-hand side is the input, and I'm going to use the same example that we had on the board, which is this $400,000 mortgage, 30 years, 7% interest rate. You can change these depending upon whatever it may be. It's real simple, it just takes a second. And how much extra do you want to put in every month? We said for this example we'd use 200. You hit calculate. On the right hand side it gives you the results. So just like we showed on the board, it'll show you this is your principal and interest payment. You're going to add an extra $200, so it's going to take it to $28.61 per month. And then here are your results in text format first. Total payments, no extra means without the extra money, $958,035, $958,000 in total, which is the $400,000 plus the interest. Total payment, $831,418 with the extra $200. So here's what you'll save. Without the extra, your interest is $558. With it, it's $431. Right here, big print, save by paying that extra amount, $126,617. But it gets better. It puts it into a easy to read terminology here. You'll shorten your loan by 69 months. That's over 5 years, about 5.5 years, and you'll save $126,000 in interest by paying $2,861 instead of $2,661. So if you're not a math person and you don't enjoy looking at this kind of information, all you have to do is just read this sentence. Then every row as you scroll down is a month. So it says, here's your payment every month, right? And then this is how much is going to principal. It's not much. And this is how much goes to interest. So the reason we're able to pay this off faster is whatever you put here as extra will go to the principal. And as you're scrolling down, this is every single month. It shows you how much you're putting in, shows you exactly what your balance will be until it's finally paid off. And as you can see, it's only 291 months. A normal mortgage is 30 years, 12 months in a year, 360 months. But it's only 290 because we were able to make it shorter. And you can see here, watch this principal amount change and watch the total savings change if we went to 400 extra a month. That would take your payment up by $400. It would make your principal that you're paying down $727 because we added another $200. Went straight to principal. This was $527 a moment ago. Now it's $727. That makes sense because we have a higher payment. You'll shorten your loan by 113 months and save $200,000 by adding that extra $400 a month. That's why we put this calculator together, so you can see how much you can save by making some changes in your budgets and putting more money towards your mortgage. So I hope you find this helpful. Please use it, share it, and if you go to financial calculators over here, it'll take you to all the calculators we have, and we're adding more all the time. And as you click into them, you will see we also have explanations. In this case, this describes the method, and this describes how to use the calculator, written terms, and the additional information.
On this channel, I put out multiple videos to help you get out of debt, whether it's credit card debt, car loans, personal loans, mortgages, you name it. Please subscribe so you can see more of these videos and you get every week's update. And I always appreciate a like. On this channel, I truly believe the government does not care about you and banks don't care about you. And real freedom is financial freedom. It's up to you to take control of that.